If you're wondering what your favorite tech stocks are likely to do this coming Monday morning, then this is the video for you. I'm going to dive into all the technicals, fundamentals, some news, and the overall sentiment in the market. We're also going to talk about and look at economic data. We're going to look at the VIX. We're going to look at SPY, Palantir, SOFI, Microsoft, Google, NVDA, and we are also going to look at Meta as well. Let's dive right in to the charts and the news and figure out what's likely to happen. And stick around and don't skip any part of this video because I'm going to share with you a very specific strategy that I've been using to gauge what is likely to happen in the market Monday morning. And I use it every single week. I'll be showing you that somewhere in this video, so be sure to watch the whole video so you do not miss this. Starting off with the VIX, because this is the most important thing to understand. The VIX gauges volatility in the market. We're going to go over the volatility right now. We're going to go over the VIX, but stick around because after I show you the VIX, I'm going to show you another specific strategy that I use and another ticker that you can look up, which will gauge economic growth or decline against world currencies. We're going to do that next after the VIX. So you can see that there's been a lot of volatility with the tariffs and it has calmed down drastically. I predicted that the VIX would move in a downward fashion about 10 days ago, and it has done exactly that. And you can see that when Donald Trump paused tariffs, it dropped and the uncertainty kind of fizzled down and it calmed down quite a bit. And then when there were some tariff deals reached with Europe, it calmed down even more. And then there was a little bit more volatility back on the 23rd of May, but then things have been calming down ever since. And now that there's been talks with China, we are now below the $18 range, which is very good in green. Previously, since the beginning of May, we were between the green and yellow, which is kind of a little rough, but decent. But now that we're below green, which is 18, this is really good. And this is my custom strategy and my custom guidelines on the VIX. Green and yellow is between 18 and 20. And then between 20 and 25 is yellow to orange. 25 to 30 is red, between orange and red. And then once you get to 30 or above, it's straight red, meaning the volatility is insane up here and it's very high in here. It's moderately high here and it's fairly low to moderate in between green and yellow. And then below green, it's very low and very stable, which is the ideal condition for safety when trading in the market. Now, Monday, we have core inflation in the morning, so the market is likely to dip a little bit in the early morning pre-trading hours between 7 a.m. and 9:30 a.m. Between 8:30 and 9:30, it's no man's land depending on the data and where things are likely to go, but we're going to be able to gauge that very late Sunday night. And we're also going to be able to gauge that even more so in the overnight hours. I'm going to show you exactly how to do that. Then we have on the 12th, which is Wednesday, we have PPI month over month. And then on Friday, the Michigan consumer sentiment. So this is pretty hefty economic data coming out this week. Not as much as PMI services, manufacturing, and core inflation and unemployment and housing starts, or Jerome Powell speaking, but it's still fairly high. But Monday with core inflation, this is critical. And PPI month over month, not as heavy weighted as core inflation. So really Monday is the big day. And if we miss these numbers, the market is going to react accordingly because we're already pricing in lower than expected numbers, which is good. And if we don't hit these numbers or at least meet the expectation, things could be a little rough this week. Now, when we're looking at inflation year over year, previous 2.3, we're forecasted 2.5, and core inflation year over year 2.9 to 2.8. The number that's really critical here is inflation rate year over year. We previously had 2.3, it's expected to be 2.5. If we get 2.3 and we beat 2.5 and we yet again get 2.3, the market is going to really run on Monday. It is going to be very bullish very quickly if we can get 2.3, which shows a lot of stability in inflation and gets us just that much closer to interest rate cuts. So if you want to gauge the US dollar against foreign currencies like the Japanese yen, which Warren Buffett loves and invests in, but not only that, also the euro dollar and other currencies as well, we look at the DXY, and anything below $1, we're underperforming, and we dipped all the way to like 98.1 or 98.2, and now we're back up to 99.2. Once the American dollar gets back up to $1 or 100, which is right up here, then that is going to be pretty good. And that could happen this week if data on core inflation comes out really, really good tomorrow morning. And that is fairly likely to happen, especially if core inflation is met or even beaten Monday morning. This will be a critical factor to look at, but this gauges the strength of the dollar over time against foreign currencies. I utilize this along with the VIX and other strategies to kind of gauge the strength of the market, the strength of the economy, and what's actually going on. So let's go ahead and take a look at Palantir. This is a stock that has been bouncing off of a ceiling for quite some time, and if data is good this week, it could run even more. We have a double, triple top peak. There's been a lot of resistance up here in the 120 to 129 range, but this is the double peak right here, 1 and 2. This is a little bit higher and a little bit higher, so it's inching higher every time, making higher lows and higher highs. See, low, low, and then you have high, high, high. But this low right here is a change of character. So when we look at Palantir, we can see that there's a change of character right here. See how it's lower than the previous lows? This is critical to understand because now there's a wedge forming like this. So somewhere around mid-June, based on this wedge, it's going to consolidate. Most likely we'll have a move up or down. We get interest rate cuts, inflation is good, everything is good with Palantir, the sentiment, the sector, tariffs, all that stuff. Palantir could move up even more. In my opinion, it's going to be tough. It could happen, but I think that there's a little bit of a ceiling here and there's going to be a pullback into the 110 to 115 possibly, but likely 115, 120 is going to happen sooner rather than later. I just think Palantir is a little bit overbought. Looking at Meta, same thing. Meta's got a lot of resistance up in the 700 range, and it had a lot of resistance in the 650 right here. But again, now it's running up, and there's going to be resistance between 700 and 740. This $40 range, there's a lot of resistance, but it's working its way up. It has broken out of the downtrend, broke the structure, change of character. We've officially broken out of the downtrend on Meta, and this officially happened on June 2nd. So the market has actually went from extremely bearish to neutral to consolidating to slightly bullish to consolidating to slightly bullish again, and now completely has broken out of the downtrend and officially right now is bullish again. So there's been a lot of change in the market and Meta is doing really well. Unfortunately, if you're looking to get into Meta, I think right now is not the greatest time because we have earnings coming up. Buying Meta around 650 or lower would have been ideal. I believe right now there's a lot of room left to run in Meta in the coming years. But if you're trading like very short term, 3 to 6 months or less, this might be a little bit high of a price for you. You can see that Meta resisted this downtrend right here, and then it came down, came up, resisted again, then came up, broke it, came back, and then you notice something particular here. You notice that Meta actually utilized the exact same level it resisted has now become support. Let me zoom in so you guys can see. You see, it resisted and went down, and once it broke through, it came down and it used the same line as support. So personally, if I was looking to get into Meta or was looking to do something with Meta, I would likely go below this and I would sell 660, or even safer, I would sell 640 or 650 puts. 650, 640, fairly safe going a week or two out because you're below this area that has a lot of confluence and support right here. And it's also had it at multiple times. Right here is more and more right here. And if we go to the left, there's a lot right here. So pretty much 640, 650 at this point would be the safe spot. Looking at SOFI, nothing's really changed with SOFI. Great company. I highly recommend selling put options and getting a good average. Long-term investment, very strong. All-time highs of 1847. We're back up to 14. My AVP is between 12, which is right here, and 1350, maybe even 14. So we're just at the peak of the AVP. I would personally look to sell $13 puts going several weeks out. Continue to do that to lower the cost average of your shares. You can lower that cost by continually selling put options. SOFI is a stock that is likely to go up by an exponential amount in the coming 3 to 5 years. Once they go global, in my opinion, it is over. Anthony Noto already said it's not a matter of if, it's a matter of when they become the biggest bank in the United States. They're working on that. And if they go global, if and when that happens, that would be very, very huge for SOFI. Based on price to sales, at a current price to sales of 4, 4.25, 4.5, depending on price and market cap fluctuation, they have about a potential 2 to 3x in the next 2 to 3 years. So SOFI, very realistic realistically could be $30 to $40 in the coming 2 to 3 years. And it's pretty much in grasp at this point in time because they've peaked at $18.50 already. So only $1.50 shy of $20. This has already happened. So the more profitable they become, the better the sentiment is, the better the stock's going to do. And with the economy getting better, that's only going to help even more. Interest rate cuts, that helps even more. So SOFI is likely to work their way back up into the 16 to 16.50 range in the coming weeks. I wish that I had more shares. I should have added more, but I do have quite a bit. And if you're looking at getting in SOFI, I would be selling put options in the $13 range. If you're enjoying this technical analysis and you're not quite understanding it, maybe you're new to the market, maybe you're losing money in the market, maybe you just don't know where to begin. I take pride every single day helping people just like you understand the market and get better and become profitable. This way you can live the life you deserve. I was able to build the ultimate life for my children, spend all my time with them, and that's what matters most. And I was able to do that by trading options in the market. And now I want to help you do the same thing. If you guys want to join my Discord, take my modules and on-demand training, have access to all my trades, copy my trades, trade alerts, the Ask Corey section where you can ask me questions 24 hours a day, and you get access to 2 live coaching calls a week that are 45 minutes each while the stock market is open, and you can watch those recordings because you have access to those endlessly. I would love to help you out. I also offer private one-on-one coaching. If you guys are interested, you want to make profits like you see on the screen with my students, then you can do so at any time. The link is in the information box below. Next, we're looking at Google, and besides the lawsuit going on with Google, which is kind of holding them down a little bit, we also have data center issues and water consumption that's kind of spooking certain investors to some degree. But overall, Google has a very strong company. They have Google Home, the Google Camera and Nest products, which is a part of the Google Home. They have Gemini AI, which is absolutely amazing. They have Google phones and hardware and cameras that they also make. They have YouTube, Google AdSense and ad revenue, and working with advertisers. And they also have their search engine, which is also huge. But on top of that, the big thing here is Willow, which is quantum computing. They're going to be the king of quantum computing, most likely. Now, this is obviously not a guarantee. There's obvious risks with Google, but they should, based on the size of their company, the amount of money they have in AI and their data, the amount of data they've stored over the years based on search engines. And this is also huge. This shows and illustrates a picture where Google very well and very likely could be the king of quantum computing. And with that being said, this could be a situation where the stock goes from $170 to $1,000 in the next 5 to 6, 7 years. Probably closer to 5 to 7 years or more, but it could be sooner, but it's hard to tell. But likely in the next 5 to 7 years, we'll be headed in that direction with Google if all goes okay with quantum computing, because they definitely have the upper hand and the advantage in that department. We can see that Google dipped from most recent highs of $209 all the way down to $144, which was a stellar buy. I bought a lot and I sold it at $170, but the stock did come down, had a chance to get back in. Now it's back up to $173. So Google is definitely a good buy in my opinion. There's inherent risks here, so you have to be careful, do your due diligence with any stock. If I was to get into Google, I'd be looking to sell put options on Google around 160 to 165. And this way you could dollar cost average and lower your overall cost basis. So if you have shares up here or up here, you can just start firing off put options down here. And even if you get assigned, well, then you're lowering your average cost. If you don't get assigned and the stock just does this, all these premiums you keep collecting every week, you can subtract that from your average cost in the share. So if you have an average cost of $165 and you're selling 2 put options at $200 each per week or $150 per week each, it's $1.50 off your average cost per week. So after a month, you can take $6 off your average, which would be $159. So instead of $165, you now have a $159 average. You can do this by selling put options. It is so powerful. If the stock goes down, you just accumulate more shares. And remember, like I said, time plus good stock equals money. Time in the market beats timing the market. Warren Buffett pretty much made that famous. And the market's pretty much patient people taking money from impatient people. That's what the market is. So by continuing to be patient, adding to your position, dollar cost averaging, selling puts, diversifying your portfolio. You're setting yourself up for success long-term with lower risk. Next, we're looking at SPY. Now, you have to understand what SPY encompasses. If you're wondering why SPY is going up or going down, you have to understand that SPY has Apple, Amazon, Google, Meta, and it also has Microsoft. And there's more, but those are the big players. Apple as well. So looking at the SPY, you have to understand if this stock goes up or down, or ETF, there's a reason for it. There's underlying assets that are in this ETF that have control over it, and more so than others. So if it's going down and you're wondering what's going on with the SPY, other stocks are going up, there's probably one of the big kahunas, or the Mag 7s, holding it down. Apple, Amazon, Microsoft, Meta, Google, these are the stocks that are really big players in this ETF. You could have Meta and Google going up and Microsoft consolidating. So you got two going up, one consolidating, but the SPY is going down. And you're asking yourself, wait a minute, why is the SPY going down? Well, probably because Apple or Amazon are going down, or both. And if just one of those stocks is going down a lot, it's going to take two of the other stocks to help counteract that. So if you have Amazon and Apple having a rough day, but Microsoft and Meta are doing well and Google's consolidating, then the ETF's probably still going down. Apple carries a lot of weight in the SPY, a lot. And if Apple's getting beat up, SPY's having a bad day. And like I said, in order to counteract that, we would need Google, Microsoft, and Meta to all be going up, including Amazon, to help counteract what's happening with Apple. So keep that in mind, that Apple and Amazon have a very big influence on SPY, but particularly Apple. And you can see that SPY has completely broken out of the downtrend. We have a break of structure right here, another one here, another one there, and another one right there. And we are in a mini uptrend. SPY is likely to break $600 Monday morning as long as inflation data stays at 2.3, or at least it meets expectations at 2.5. But if it stays at 2.3, it proves to investors and it proves to everyone else that the economy is stronger than they thought. And it in turn will give us even more confidence on the SPY. And like I said, the SPY is in mini uptrend. It is likely to go to 620 this summer, by the end of summer. That's where the projection has been on the SPY, and bare minimum to return to 612 or break this ceiling, which a lot of stocks are currently doing right now. Next, we want to move along to Google. And after Google, I'm going to show you a strategy I specifically use to gauge the market Sunday night into Monday morning to see what's likely to happen before it even does. And we're looking at Google here. It has broken its consolidation, and we've had a break of structure right here at 164, 170, as well as 171. And it's trying very hard to break 175, which it has not been able to do. Now, if you have an average cost of 160 or 165, let's say somewhere in here on Google, you can always sell puts down here at 155, 160 going a month out. The stock drops and you get assigned, you dollar cost average, and it runs, you make more money. If you don't get assigned and you just keep selling puts down here over and over again, you subtract that from your price up here. Meaning if you have an average price of 165, let's say 165, but you sell a $100 put here, a $100 put here, a $100 put here, and a $100 put there for a month, $4 per share, which means your average cost is 161. Even though you weren't assigned, you got to take that off of your average cost. So you can lower your average cost on the stocks you're owning by selling put options. And just remember to be safe and not go more than 10% of your portfolio in any one position. I teach my students in Discord the 3310 rule, as well as my AVP, which is exactly what this block is. This yellow block is AVP, and this is my double fib, which is another strategy that I created specifically from dark pool data and hedge fund data, and it works very, very well. Something else I want to show you that I don't normally do outside of Discord, I'm going to show you what's going on inside these candles, which very little, if anybody, ever talks about. But in hedge funds, we actually go off of the data in the candles, not just the candles themselves. I'm going to show you that. But first, I promised I would teach you guys how to gauge the market Sunday going into Monday. And because Japan and China's markets open up in the early hours for America, and then England is next, this is how we gauge it with the futures, the micro mini and the mini S&P 500 futures. If we see a gap on the futures like so, which is right here on Friday, May 9th at 2 p.m., then typically the stock will gap as well. And the stock market will have a run. But going back and looking at the micro mini, we can see there's a big gap here, a big gap up on Tuesday, the 22nd of April. If we go to Google and look at the 22nd of April, we will see that there was a big run, you see, and this happened right here. It started 4 a.m., 5 a.m. in the morning, and it ran. And if we look at SPY and we look at April 22nd, it is pretty much the same thing right there. See, right there, and it ran. So when you look at the mini S&P or the micro mini S&P, it dictates what's going to happen, whether it be a gap down, gap up, or just consolidating. We had another gap up here. And so with the data coming out Monday morning, I anticipate that it's more likely it'll consolidate, maybe fizzle down or fizzle up a little bit. It's really hard to gauge smaller movements like that. It very well could gap down with a doji candle like that and then begin to sell off into Monday morning. It could also jump up right here and just kind of start gapping up. And the sentiment overall is good in the market. So I feel that it's a little more likely we might have some gapping up on the SPY, something similar to this effect, or at least moving up. But it's more likely to go up a little bit or consolidate. It could dip a little bit as well. I don't think we're going to gap down, but it's really hard to gauge anything for certain because overall market sentiment, especially abroad, we don't know what's going to happen while they await data. So you might want to consider being very safe on this, engaging this strategy, utilizing it Sunday night to figure out what's likely to happen. Whatever this does in the overnight hours on Sunday is what the stocks are going to react to Monday morning while we await data between 7 a.m. and 8:30. And then between 8:30 and 9:30, things will get pretty volatile. The bell goes 9:30 and things will either be bearish or bullish depending on data. Now looking at Microsoft, it is at an all-time high. I wouldn't want to buy Microsoft right now. The area to buy it would be between 405 and 440. Somewhere in this $30 range is where you'd want to add Microsoft. Right now it's way too expensive, but it's a great stock. It just would not want to be buying at the top right. I just wouldn't want to do that. If you must, I would go out 6 weeks and sell puts in the 425 range. This way, if the stock drops, you get filled down here. And anywhere between 400 and 420 in here is really good. So if you can get your puts closer to that range, then you're doing very well. Looking at NVDA, yet another stock that has broken out of consolidation and downtrends and worked its way all the way back up to near all-time highs after Broadcom's earnings showing strong demand for artificial intelligence and continued strength in the AI chip market and the AI tech sector, AI revolution and the tech revolution, like Dan Ives says, which is a 4 or 5 o'clock in the morning party that goes to 4 or 5 a.m. and it's only 10 p.m. he said, which I feel were more like 11 p.m., maybe midnight. A big portion of the moves already happened, but there's big and consistent demand still looming and a good potential future in AI tech and of course quantum. But when you look at this chart, there's a lot of resistance up here at 143, 144, 145. I'd be very cautious with NVIDIA at this point in time. Remember, dollar cost averaging is good. Selling put options down here in the 120, 115 range, maybe 125 range is better because if the stock goes down, then you're getting in down here in your dollar cost averaging. Buying right now at the top, I don't recommend it. Do your due diligence, be safe. You don't want to just start throwing money at stocks like this. It is not a good idea. You always want to be safe. It is the big key about the market. It's patient people taking money from impatient people. This is exactly how you do it. You do not buy up here. You're buying down here and selling puts all in this area so that if the stock drops, you're collecting shares down here. And then when it runs again, you are making profits. Looking at Tesla, it is at a support, a very strong support of 295. There's a lot of support here, a lot of resistance here, and a lot more areas of resistance, support, resistance. So it's a very well-known area between 290 and 300. It's very strong. But unfortunately, when a CEO of a company like Tesla says things that he's been saying and acting the way that he's been acting, not a good thing. And it's definitely not good for Tesla. And it doesn't matter if the market goes up and Tesla goes with it. If Elon says or does anything that upsets people or that people want to protest or he creates any issues, then Tesla's just going to go right back down. So I'd be very cautious with Tesla. They've also had very shaky earnings. Donald Trump has also cut the incentives and the tax breaks breaks. Donald Trump's also cut incentives and tax breaks on Tesla, which is not doing it any favors either. And with shaky earnings combined with that data, Tesla's a rough buy. And considering the government is still investigating the safeties or the issues of robotaxi, and of course the robots not being ready to go yet, and all these things up in the air, then you add tariffs on top of that, and uncertainty with inflation data at this point, all this data we got coming out, and then on top of all of that, geopolitical issues, then on top of all of that, people were protesting Elon a few months ago, and now to top all of that off, Elon is running his mouth. And I've been a big supporter of Elon for many years, but this is crazy, and for Tesla investors, it's beating up the stock. Is it rigged? Maybe it is. Maybe it's all set up. I don't know. What I will tell you is there's a lot of things in the market that are rigged and that are set up, so I wouldn't put it past them. And on top of that, even if it is rigged, you never know what they're going to do next, and the stock could drop. So be very careful. Tesla, it's a great stock to trade intraday, scalp, weekly swing trade. To run the wheel strategy as quick as possible on it and as safely as possible, you can make money. But holding this stock, it's very volatile. You can see it go from 200 to 400 to 200 to 400. It's absolutely crazy. So just do your due diligence. Be very safe on Tesla. I personally would wait before I made any moves on this stock right now, as it's just not looking pretty with Elon. If you enjoyed the strategies that I showed you in this video, and maybe you're looking to get better, don't know where to begin, or having trouble in the market, if you would like to make more money in the market, maybe you're just getting started, maybe you're a beginner, you want to retire, or maybe you just don't know where to begin at all, and you enjoyed this video and the strategies and you want to learn more, you guys can sign up for my Discord at any time. Links in the information box below. If you want to make profits and success like my students that you see on the screen right now, I would love to help you. It's what drives me every single day. Just click the link in the information box below to get started with my Discord, and I look forward to seeing you on the next upload or in the Discord real soon. Take care, fam.